the best pedagogical way to ever get somebody to do something is to let them do the talking and the work and the thinking. And how do you do that? You ask them questions. Instead of telling them, go invest in X, Y, and Z, you say, what kinds of companies interest you? What do you think about this whole sustainable aviation fuel mandates that are coming out in Europe? What do you think about carbon capture? Does climate change interest you? Just question after question. They then build the case themselves, and that is a much more effective way of quote unquote persuading someone.
This is Wall Street Wildlife. Before we get to this week's show, a short word from our sponsors.
All right, if you're serious about investing, you need to know about public.com. That's where you can invest in everything: stocks, options, bonds, crypto. They even offer some of the highest yields in the industry, like the bond account 6% or higher yield that remains locked in even if the Fed cuts rates.
What sets Public apart is how they give you the tools you need to make informed investment decisions. Their built-in AI tool called Alpha doesn't just tell you if an asset is moving, it tells you why the asset's moving, so you can actually understand what's driving your portfolio performance. Public is a FINRA-registered, SIPC-insured, US-based company with a customer support team that actually cares.
Bottom line, your investments deserve a platform that takes them as seriously as you do. Fund your account in 5 minutes or less at public.com/wildlife and get up to $10,000 when you transfer your old portfolio. That's public.com/wildlife.
Paid for by Public Investing. Full disclosures in podcast description. For an advertising-free version of the show, check out patreon.com/Wall Street Wildlife. Hello and welcome to the latest Wall Street Wildlife with Christoph and Luke. On this week's episode, Calumet closed their DOE loan. What does that mean for investors? Also, one of my 2025 predictions is already coming true. I'm going to tell you which one and why it's pretty exciting in the world of health tech. We are going to introduce you to SAF, SAF. What is it and why is it important? And we're going to answer the question, is it possible to invest in stocks that are good for the planet?
Excellent lineup today. Thank you above all to our Patreons at patreon.com/Wall Street Wildlife. You guys are the best, the very best. Badger, you look like you have some dirt on your chin.
Yes.
Did you fall into some mud pit on one of them French Alps you're skiing down?
If you didn't catch the last couple of episodes, back in December, Christoph challenged me to grow a beard. I said no, but I'm now away from my wife for a month. So this is my lay mass. We're now we're halfway through January, and it's coming out grey. Look at that. If I let it go, it would be like a Gandalf. Although there's nothing there. It would be some weird Gandalf chin, I guess, if I let it run.
Don't hold me to this, but you look a little bit sexy.
It's not. I don't think
I'm afraid that this is forever recorded for posterity, and you'll be able to lord this over me. But there's a little je ne sais quoi with the.
I've had a couple of video calls with Katrina. She hasn't mentioned it just yet, so I might have to leave it in place until she arrives on the 1st of February for ski season, and then we'll see how long it lasts. I'm assuming it's not going to last more than 10 minutes after her arrival.
Oh, you mean because over the video call she didn't notice it? Because
that's
it's
right. It's a weak beard.
Okay. Meanwhile, you know what? I had a great fortune just yesterday. I was going about my business, and all of a sudden I found a lost banana up in here. I was like, oh.
It's all tribes, Amazonian tribes that have been lost from humanity in your beard somewhere. Yeah.
This is, I need to share this with you. I have a great pedagogical conundrum. Classes start tomorrow. And usually up to this point in my life, if I clean shave and, wear my baseball cap, I often in the first day sit down with the students and they don't recognize me as the professor. But if I go in like this, I think that gig is up. So I might have to take on the new persona this semester, like the
Are
The
you leaning into, because you do look significantly older now? And I look back at some old videos from last year. I was pulling some editing out, and like this, who's this young guy? Like I completely forgotten what your face looks like under that bush. Are you going to stick with it?
who's that young whippersnapper? Yeah, well, yeah, it is the gray that's a little surprising, but
Must be that all those shitco stocks in your portfolio that make you grey.
I love it that when they're going to be up like 700%, they're still going to be shitcoin stocks. I
They'll
love
always be
it.
shitco stocks.
What's a shitco? Always a shitco, right? That's the Badger way.
Well,
Hey, what's your
should we talk about an actual shitco stock? Because at the opening of last week's episode, we were both lamenting the fact that you took a short position on your Safari stock from 2 weeks ago. Quantum, what are they called? Quantum Computing Inc.
Yeah, it's a bullshit made up name, but yes,
Yeah.
that's that's all they are. All they are is the name.
So your short wasn't going very well when we checked in last week. I think you might have some good news for us this week, though. How's it looking?
Yeah, so it's looking good, but here's the important point. When I made the short, I timed it perfectly. It was peak. It was like $26 a share. It was like very, very high. Because the options IV number, that tells you basically how expensive an option is just in and of itself because of the volatility. The more volatility, the higher the market makers price the option. That IV number was stupidly high when I bought it. It was like 300% or something. That tells me that in the future, even if the stock goes down in the direction I need it to, the IV itself drops, therefore lowering the value of the price of the option. So I knew it wasn't going to be enough for the stock to go down. And so as the stock, even on the big day where it dropped, what is it, like all quantum stocks were down 40 something percent. Even on that day, after that huge drop, my options, I was only up like 6%, right? So most people would be like, oh shit, I got, schooled by the market makers and you can't win this game. But the difference is what I was doing, I wasn't playing for the 45% drop. I think this is a stock that's worth less than $1. It's close to, it's not a fraud outright, but yeah, like I said, it's mostly a name. And it has some quantum physics scientists on its team, but that does not a business make. And so I'm expecting this to actually drift down to below late October. It was like selling for about $1 or under $1 a share. So the puts I bought, one, I have the right to sell at 15. I have another right to sell at 10. Minus the premium I paid, I'm going to be in the money at around $8 a share. And in this moment right now, as we're recording, it's dropping to 705. It's dropped to 705. So it's about to break 7. So what is it? I'm up 30% right now.
Cool. Okay, that's good.
Which right for sometimes you want to analyze, like I could close it now, right? I was in the trade for how long? Like a week? What is a week? 2 weeks?
Yeah.
If you analyze 30%, that's a fantastic trade. So
Sure. Very good. We don't endorse like taking short positions generally, but sometimes you see something that's just so ridiculous, you got to do it, even if you're doing it for the lols.
right, exactly. Yeah, and I just I couldn't help myself. Like you see a fraud, priced at $3 billion, for the market cap, the market's going to figure it out, and it's just not rocket science. But what is I'll say this again: what is rocket science is the hard. I'm sorry, it's not rocket science, but it is hard to stay emotionally grounded, knowing that people are just maneuvering the price whichever way they want. You have to let the thing play out.
Hey, so I think we should touch on the fact that over the last 2 weeks of episodes, if you've been watching the show on YouTube, or actually even if you're listening, you've heard an advert. Like we have adverts now. And we are advertising initially. Our partner is a company called public.com. So, Christoph, you actually know a little bit about public.com. You are a user. So, why don't you tell us a little bit about your experience of that platform?
So I listens to our parent episode on investing for parents and kids, which if I do say so myself, I think that's one of the best things we've done, Badger. I've heard from people in my inner circles that they've listened to it sincerely and they passed it on to their families and friends. So if you haven't listened to that, it's what, episode 60? Highly encourage folks to go back and listen to that episode. So after listening to it and realizing, oh, some of the stuff that we said is really darn tootin' smart, I decided to open up a brand new investing account for my stepdaughter. And I went to public.com and I wanted a platform that seemed robust, that had all kinds of tools, and enabled me to invest not just in equities, but in crypto, specifically Chainlink. And it had all those things. It's kind of, you know what it feels like to me? It's sort of like, well, I love Robinhood's interface, but it seems like Robinhood, but maybe like it looks maybe even a little more sophisticated. Like it's a legit solid platform that I look forward to using in the coming years.
Great stuff. That's good. I'm not able to use it because I'm outside the US and it is US only. But I do want to say on the pod, right, we are going to run adverts now because we're kind of growing up a little bit. We're getting a bit more mature and seems like people want to place ads on our show. So fantastic. But you've got our commitment that we will always ensure we're advertising products and services that we actually endorse. We're not just going to be shilling like random beard products or whatever unrelated nonsense. So we'll be doing our DD before we list any new sponsors in the future. And what was I going to say? Sorry.
Wait. Did you say random weird products or random beard products?
Yeah, beard. Well, I'm weird. Whatever. Random weird products. Sure.
Well, if I come across some new like transformative beer potion to make this go back to black, who knows?
Yeah, I think you're beyond that. Me too. But if you do want an advert-free version of the show, we got one of those for you too. So that's over at patreon.com/Wall Street Wildlife. So our loyal Patreons don't have to listen to the ads, even though the ads are for products that we do believe in.
Right. And I think it's important to mention that if you want to check out public.com, type in public.com/wildlife, and that's our affiliate link. I think there's some bonus to it.
Yeah, fantastic. Very good. Alrighty, so let's hit.
Wait. You know what? I want to acknowledge. I think it's an important point, the one you made about us, quote unquote, growing up. Obviously, I'm still a monkey. You're a badger. There's some ways in which this show will always be friendly and fun, and about making people feel it's okay to step inside the investing waters. But at the same time, investing has real money at stake. And we've been doing this for a very long time. We know what we're talking about. So it is, from our end, a legitimate source of confidence that there are serious investing platforms that say, yeah, these guys are legit. And I think it's better for our community and better for investors to know we're backed by legit products.
Yeah. Looking forward to it. All right. Should we hit our roster of topics for this week? Where do you want to start?
Almost, because you have to tell me what your T-shirt says because it's in reverse on my side of the screen.
We'll fix that in the edit then. It's I'm that legendary badger everyone was talking about. It's actually a birthday present from my brother Matt because it's my birthday coming up. So yes, Matt, I did open the present a little bit early just to make sure there wasn't drugs or God knows what in that thing before I brought it overseas. But yeah, very kind. So I thought I'll wear it today because it's nearly my birthday.
Are you excited to have your first legal drink? What are you going to get? A gin martini?
Well, my go-to is a Negroni, as you well know. But I'm way past getting ID'd in bars.
I don't believe that for a second. I've gone out with you. They ID'd you in every single joint.
Yeah. So what I'm doing actually, because it's January. I'm doing dry January at the moment, so I haven't had a drink since, I guess, New Year's Eve. Yeah. Been out to the pub a couple of times for friends in London, but just had like non-alcoholic booze and drove home. And and I'm feeling. I'm not overweight, but there's definitely like a bit of booze on the hips that I can see is now gone just in 2 weeks of not touching alcohol. So there are some benefits, it turns out.
Well, all those runs you're doing down the Alps, they should help a little bit, right?
Yeah, yeah. I mean, skiing can be kind of chill and just sort of cruising along and not burning too much energy. But like most of the days, it's like jumping off stuff and pushing through like pretty heavy powder. And yeah, it's exhausting. So yeah.
Yeah, you're doing for our listeners that don't know, Badger does some serious skiing. Like he's yeah, this isn't your bunny slope packed powder stuff, but for our all our patrons, he posted this amazing safety parachute floaty device thing. You have got to check it out if you did not see it. It's quite the contraption, and I'm glad you're wearing it because when you told me what it's for,
Right.
aka to help you not drown in an avalanche, I'm like, yes, we need to keep you around.
Yeah, yeah, that's fair. That's fair. I think it doubles your chance of surviving an avalanche, so that's pretty good. I'm happy to. They're not cheap. Like I don't want to go down a massive rabbit hole with like mountain safety stuff, but it's interesting actually because so these things they're called avabags or avalanche airbags. It's basically like a backpack, but it has like a giant airbag. You pull like a ripcord and it deploys. And the idea is it keeps you on the surface if you're in quite a big avalanche. And like they've just been impractical for decades because you had to have like a gas canister, and if you fly internationally, which most of the time you're doing to get to your ski location, like most airlines won't let you travel with these gas canisters, so you have to either like empty it or you have to go and like buy one when you get to your destination. It's just a pain in the ass. But there's a new breed, it turns out, I hadn't realized, that came out a few years ago, and now they have something called a supercapacitor. So I had to look at it. There's like these big, like 5 massive capacitors. So you basically just plug it in, like, and charge it off of USB-C, and the USB-C battery charges the capacitors, and that's enough oomph to like inflate this thing twice if you need it. Like if you had to like deploy your avalanche airbag twice in a day, like you're probably in a bad location. Like head home.
Yeah, I mean, it is telling that you're skiing in a way or in places where worrying about avalanches is a thing. Like you're legitimately in like what's it called, back country?
Yeah,
Is that
back
yeah, yeah. I've never done that. So when I get myself to Europe or when you're over in the U.S. next skiing season, I would love for you to teach me how to do one of those runs. Never done it before.
Okay, cool. All right. I didn't know you were a skier. I thought monkeys lived in the jungle, not on the slopes.
Well, we adapt. We have opposable thumbs too.
Okay.
Okay. So, what kind of investing show? I mean, what kind of podcast is this? Right.
Yeah.
Yeah.
Tell us about Calumet. When we go there, let's talk about an actual company that you are invested in.
Okay. So, sometimes the stars align and all the topics for the day cohere. So, I have 3 separate things to talk about that are all related. Shall I hit it at the top?
Yeah, but let's like intersperse it. I won't let you just talk at our audience for half an hour solid. But let's hit the first one.
Okay.
So, like, who are Calumet? What do they do? Why do you own them?
Yeah. So, a small position in my King of the Jungle portfolio. I have 2 shares of Calumet, ticker CLMT. They are 2 businesses basically in one. There's a boring, dependable, non-exciting business that makes, call it like oily products. Like think of the stuff you go to an auto shop to like grease your wheels, kind of things in cans that lube stuff up one way or another, right? Like not exciting, but steady, right? So steady revenue. But they have a second half of the business called Montana Renewables that is basically a conglomeration of, call it, factories or production centers that are turning carbons into SAF. SAF is short for Sustainable Aviation Fuel. This is a big deal because we know that in terms of global pollution, the pollution that comes out of airlines and commercial flights is the worst. And so globally, because of global warming, there's all kinds of mandates that have come out and are coming out that are forcing airlines to start using SAF. Problem is, SAF production is complicated and limited. So this is a problem of scaling up to make enough of it. This company, Calumet, makes this stuff. What happened on Friday, January, 9th at market close, is that they finally closed the Department of Energy loan for $1.4 billion. So the reason I was interested in this is because this is EOS adjacent for me. I went through the Department of Energy closing process for 2 years, and I realized what this kind of catalyst can do. So this is one of those special situations that is hard to understand. This isn't one of those easy buy company that you like kind of stocks. The thesis, though, is I'm going to try to simplify this as much as possible. The DO loan, the Department of U.S. Energy basically is giving Calumet a whole bunch of money that they're going to use to pay down a whole bunch of debt, and it basically is going to allow them to increase the amount of SAF fuels they could produce. The margins on SAF fuels are much better than the margins on regular fuels. So this is a play on clean energy or better energy and carbon reduction. And Calumet is just beautifully positioned, and the market right now is not valuing the extra margins and the volume that's going to be required going forward. Does that make sense? Do you feel like I left something crucial out?
No, yeah, I understand what they do. And so this is still a good investment now. It hasn't suddenly leapt out of the gate with the announcement of the loan.
No, so right now, as we speak, it's a big red day in the market. Calumet is one of the few stocks on my radar that's up, but it's up a little bit. They had a conference call this morning. I wasn't able to listen to it, but I think this is going to be one of those special situations that the buying pressure is going to continue. It's just going to keep drifting upwards. And I still see over 200% until fair value from here. So this is definitely a buy if you're okay with complex stuff.
And I know I pull Christoph's chain all the time, but if you listen to last week's episode, we did a quick check-in on our King of the Jungle portfolio, and in the two, so it runs kind of 1st of November to 1st of November, just in the first 2 months of the new game, round 2, Christoph's investments were up over 150%. So I do pull your chain about shitcos and nonsense in your portfolio, but some of this stuff is seriously legit.
Yeah, the important takeaway for investors to note, especially if you're a beginner, because I sniff around in these special situations that I call them, that are sort of catalyst dependent, like this Calumet. Will they get the DOE loan or won't they? Will they get it in time before the Trump administration or not? Yada, yada. What is required often is it's kind of one of those situations that it looks bad, nothing's happening, and then all of a sudden the catalyst hits, and then there's a re-rate. So that's very different from the majority of or almost all of your companies, right? Which are businesses already excelling, already generating revenue, and it's just like a predictable sort of slow uphill.
Yep.
So in order to invest in something like Calumet, you really kind of have to do your deep research, and you have to be confident in knowing what to expect, and that it might not happen soon. You might have to wait a while.
Cool. Very good. All right. Shall I tell you a little bit about one of my 2025 predictions that looks like it's about to come true?
Please.
So we did do a predictions episode. I think this will be our pattern now. So we made the predictions in January 2024, and then we marked our scoreboard by drinking ourselves into oblivion in December 2024. So we're kind of looking forward to doing that again. But this time, don't show up hammered next time we do it. Get hammered during the episode, not before the recording.
Just had a couple of sips to make sure you know.
But we did another predictions episode in January, and one of our predictions was like make a prediction about like a world changing event from the world of like medical technology, and I suggested that we would see AI, the first AI designed drugs in 2025. So it's looking good. It turns out there are 75 AI discovered molecules that are now in clinical trials. So this stuff's gaining like real ground, supported in a large part by a lot of the work that Google DeepMind have done with like understanding the whole proteome. But one that I caught, the news item that caught my eye was a particular company called In Silico Medicine. I really quite like that name, In Silico Medicine. And they have an AI designed drug for something called idiopathic pulmonary fibrosis. And apparently that's looking promising in early trials. And now it's going to be coming forward for like more advanced trials and hopefully eventually FDA approval by the end of this year.
Okay, I need to offer one caveat here. I think it's fine what you said, but there's also a lot of, if not necessarily smoke and mirrors in AI and biotech, there's a lot of, call it flashy headlines. It's good that AI is helping part of the process, but the commercialization of drugs that actually work and then become sold is so much more complicated than what any AI language model can do. And so be very, very careful when chasing poppy headlines that AI helped discover drugs X and Y. It's not that simple. And there's only a few legitimate companies really doing it that have the much broader base of integrating a lot of steps.
Yeah, to be clear, like this is not my Safari stock. I'm not endorsing this company in any way. In fact, I think I'm broadly going to stay away from biotech myself, probably for the rest of my investing life. But still interesting innovation. I like to see sci-fi things like this coming to pass.
Yeah, it's better that there's stuff happening here than not. Just, okay.
Do you want to tell us about investing when it's good for the planet? Is that a thing you can do? Or are you tying your hands behind your back when you do all this kind of ethical fancy stuff and you're missing out on like huge gains from, I don't know, like tobacco and oil and stuff?
Yeah, so this was a question from one of our viewers, and it's such an important question, and one that I think is really heartfelt and a lot of people care about. I'm going to read it verbatim. I think it's where she asks, how, I have a lot of wealthy friends in my circle. How do I convince them to buy into conscientious stocks? If I have friends with many millions, much more to invest than me, what should I persuade them to do that would be good for their bottom line and also good for the earth and the other humans on it?
I didn't realize that there was a question supporting this topic. Like I've actually got a problem with the question.
Okay, let's talk about it. Yeah. So, what's the issue you see with the question itself?
It's dangerous. It's quite dangerous. It's fraught. Telling people what to invest in or what not to invest in. Like if that advice goes well, they ain't going to remember. They're going to assume it was their own idea. And if it goes badly, it's going to be your fault. So just bear that in mind. Like, I think that's something, it's like, a burden we carry as finance podcasters, and we get a lot of flack for maybe, investments and ideas that don't play out. But on this particular podcast, we try and be like really transparent, and, we're not just like hyping up the next meme stock. We try and be balanced in our views, and we often challenge each other and disagree with each other. I've made this mistake in the past where I've like suggested specific investments to friends or steered them away from certain things, and it's come back and bitten us on the ass. And, I've not lived it down. So just kind of bear that in mind. Even if, it wasn't the conscientious thing, just steering your wealthy friends towards a particular domain. Think about what could come from there. But anyway, let's get into the meat of the actual question.
No, but that's just put the warning. So here's how I would handle this. You just start with that disclaimer. Like, Stocks do all kinds of things. Do your own research. I'm not responsible for whatever financial outcomes may or may not happen from here, but I've given this some thought. And if you still want to hear my views, here's what I think, right? And then you start from there.
I still get flack despite being like disclaimer heavy from my friends where I've
well,
what have you done to me? You've set me back 2 years, Hallard.
then give the disclaimer with a tape recorder for future for future reminders. But I think so all the human shenanigans and how people hate losing money, even if it's not your fault aside, I think for me, there's two important issues here. One is, to me, the danger of what I think of as moral purity. And I've evolved in this way over the years. I too think of myself as a conscientious person that cares about the planet, and I'm not just doing whatever I want for my own egoic purposes. But after studying complex systems and, to be frank, Zen philosophy, you realize that everything is interconnected. And this ideal of wanting things to be 100% pure or good doesn't exist. It just doesn't exist anywhere. So to maintain that kind of position and invest, say, in only the purest of companies is ideologically, I think, blind. So that said, you basically have to make do with muddy situations, like gray areas, things that aren't perfect. And here it's a matter of degrees, right? Some companies you could justify as being, call it, better for the planet than explicitly awful for the planet, right? There are sharp gradations.
Let me lean on one in particular, right? Because my whole shtick, and really, I say shtick, but actually it's like my whole kind of principle about how I've always invested is to try and invest in companies that I say are making the world a better place through technology and innovation. But even that is like to shine a light on some of the grey. Like I actually think my investments in Lockheed Martin and Palantir in particular, very controversial defense tech stocks, I've come sort of to the conclusion that these are good for the planet because they're preventing potentially really bad things from happening. That'd be a hard position to try and defend and say these are like ethical, nice, cozy, cuddly companies.
All right. If you're serious about investing, you need to know about public.com. That's where you can invest in everything: stocks, options, bonds, crypto. You can even earn some of the highest yields in the industry, like the 6% or higher yield you can lock in with a bond account.
Public is a FINRA-registered SIPC-insured platform that takes your investments as seriously as you do. Fund your account in 5 minutes or less at public.com/wildlife and get up to $10,000 when you transfer your old portfolio. That's public.com/wildlife.
Paid for by Public Investing. Full disclosures in podcast description.
Right. So the sequence here is, yes, no such thing as a pure play, but then avoid the things that you just think are awful. But then step 3, more actively, I would say, is pick a, call it, domain that you think is good for the planet. So this is why today's topics, I think, are so ripe for this conversation. Because of my investment in EOS, I was interested in batteries and clean energy. Okay, so that got me doing all kinds of reading in renewable energy. That got me familiar with this whole SAF thing, Sustainable Aviation Fuel, and lo and behold, there's all kinds of tax credits and all kinds of emergent technologies that are essentially about carbon capture, reducing global warming via, call it, the energy cycle. So now all of a sudden, I'm becoming expert slowly over time about all kinds of doings and happenings in this space. And when you do that, you come across companies that are pushing the limits. And so Calumet fits this bill pretty well. I mean, it's a very complicated investment, so don't go out buying that stock now. But all of a sudden, I have a company to talk about. when the US Department of Energy gives your company $1.4 billion, you know there's something, significant going on. So I think the spiel would be, I would turn to this wealthy person and say, what kinds of good for the planet most interest you? You get some answer or not. If they have nothing, you could say to them, well, I've done some research around how bad, commercial airline fuel is. And look, there's this new company that does X, Y, and Z. Here's their website. Let's set up a lunch date. Let's do our own research, and then let's talk about it as a possible investment. How's that sound as a kind of like gentle on-ramping of someone?
Yeah. I mean, I think you're still going to get lambasted if the investment doesn't play out, but it's the right approach. I don't know that it's any of our jobs to tell each other how to invest, though. It is kind of dangerous. And, like I shined a light on two there that it's arguable whether they're good for the planet or not. Now, clearly, there are some companies that are clearly good for society. I think most of the things in my own portfolio, but just to point at one or two, like Intuitive Surgical, robotic. They make robotic surgeons, and they help surgeons do keyhole surgery essentially in a much more cleaner, efficient way, and better results for patients. There aren't many downsides to, unless you're a legacy surgeon who doesn't use this stuff, there aren't many downsides to that, a technology like that. And Tesla, a highly controversial company, however you look at it, and the CEO is kind of a lunatic, but all that they've done for the environment and energy and how we're sort of shaping ourselves as a society, it's kind of hard to argue that it's not an ethical company. Maybe you'd argue with the ethics of the leadership, but the actual mission of the company itself is quite a wholesome one.
Right. So I have to add this because I'm a rhetoric professor, and the question involves this concept of persuasion. This is why you're right about what you're saying. The best pedagogical way to ever get somebody to do something is to let them do the talking and the work and the thinking. And how do you do that? You ask them questions. Instead of telling them, go invest in X, Y, and Z, you say, what kinds of companies interest you? What do you think about this whole sustainable aviation fuel mandates that are coming out in Europe? What do you think about carbon capture? Does climate change interest you? Just question after question. They then build the case themselves, and that is a much more effective way of quote unquote persuading someone. So that's a great wind up, if you don't mind, Badger, for me to give you my stock safari pitch that will complete the sort of trifecta of topics along this angle.
Yeah, let's hear it. And just before you go into it, so in recent episodes, we go on stock safari. So we each pull out an interesting company that we think is worth talking about on the podcast. It may be a potential future investment for us. It might be something we think is absolutely disastrous and you shouldn't touch with a 10-foot barge pole. That was where we first ran into Christoph's Quantum Computing Inc. company and decided that was well worth shorting. But often our safari stocks are interesting ideas. So what's your interesting idea this week?
Right. So in full transparency, this was interesting enough that I bought myself 10 shares in my real portfolio, but it turns out each share is $1. I bought them for $1.40. So this was a cup of coffee's worth of worth of shares. But I do that to really put it on my radar and keep looking at it. So this is quite analogous to Calumet. Ticker here is LNZA, stands for LanzaTech. And LanzaTech is also like Calumet, basically two companies in one. But they're both much closer to the good for the planet, global warming antidote than Calumet, which has that side business of oily products. LanzaTech is essentially a company that does carbon capture. They have a patented, call it technology, that via microbe fermentation takes bad carbons out of the air, filters it through some fancy chemical process. The microbes do their thing. And on the other end become usable products that then could be turned into all kinds of stuff like clothing. So bad from the air on one side, outcome useful materials on the other. This is a complicated business model. The finances are quite complicated. The stock is beaten down because, like with early stage innovations having to do with complex regulatory environments, I mean, it's a mess. But right now, the valuation is below 300 million, and there's all kinds of tailwinds for exactly this kind of thing. So that's point one. That's kind of half of it. LanzaTech also owns, at this point, close to, I believe it's 57% stake in a subsidiary called LanzaJet. LanzaJet is, I would say, a direct analog to Calumet. They have a process known as alcohol to jet tech, AJT. You'll see the acronym. You put in some kinds of, call it beginning product that's carbon heavy, run it through their process, their chemical process, and out on the other end comes SAF, Sustainable Aviation Fuel. This business, I need to add that the reason this business right now is so interesting to me is because, like EOS, the government is subsidizing a whole lot of production via tax credits. Here, you'll come across the term 45Z tax credits. The governments are incentivizing airline industries and also transportation industries to use more of this fancy fuel. One more side note, if you're not just talking about airplane fuel, there's something called renewable diesel, RD. Same exact principle. There's better forms of diesel for trucking companies. And LanzaJet is going to make a whole bunch of this stuff at ever increasing margins. So goes the thesis. So you put these together and you have a company selling for another shitco, if you will, for the portfolio, very low valuation, 300 million, all kinds of tailwinds. And the Calumet closing the loan today is more evidence that this is, there's a lot of support for this.
Yeah, fair enough. Okay, cool. So two relatively aligned investments, both have something to do with aviation fuel. What's do we not have electric jets, at least for like domestic and short haul routes now? Is that not a thing?
Way back in, I want to say 2001, during the peak bubble era, I remember looking into a couple of companies like this. I think JOBY ticker was one.
Yeah.
And it looks, like the story is fascinating and interesting, but I haven't followed up on that. That could be something for us to do in the future episode if our listeners are interested.
Yeah.
Though, from everything I read though, Badger, like that kind of stuff before it gets to any impactful level, I think is like what, decade more.
As batteries, just incrementally every couple of months, we're seeing like a headline news article that there's some new battery technology. I know a lot of it is stuff that's like in 10 years time, but we are making, even just like your phone, right? The phone batteries are smaller, but they're more energy dense. And companies like EOS presumably have like other battery tech that's allowing you to store, more electrons for longer and charge them faster. So we are chipping away at this. Yeah, we should look at this. We should look at it before we get too far behind sustainable aviation fuel, because that's still, well, I suppose it might be a renewable. I don't know the process, but it's not electricity, which is going to be cleaner.
For sure. Right. So I think we're saying the same thing. Things are happening quickly. I'm simply saying that the amount of sustainable aviation fuel that is needed for all worldwide fleets, I think it's something like 300 million gallons. Mm-hmm. It's some huge number. Forgive me if I don't have it right. But even if one of these electric companies, start, like we are so far away from that, it's going to be a long time. And in the process, we need this stuff now. We need as clean energy as we can get now. So I am not at all worried about the thesis from that angle. And this is in your back of the woods, Luke. Europe I believe, is really gung-ho about this. Trump's administration, from what I've read, has more of an ambivalent take. Like he has his own, he wants to support the old energies, coal and gas, but he also has people in his cabinet that are very positive towards the SAF stuff. So, but Europe, I think, might be like, no, this is happening. You gotta, all commercial airlines need this to go. And also lots of partners, by the way, in Australia and New Zealand for this stuff when looking at financial backers.
Okay, well, good. It's a good Safari stock, good one for us to keep an eye on. I've got something not wildly dissimilar for my Safari stock, I suppose, but it's a brand you'll all have heard of, and most of you probably used. Uber, the ride hail guys. Never really paid attention to them as a company, and they went through like controversy with their previous leadership, and that was a while ago. I think we've sort of passed those days. But what's kind of caught my eye with Uber in the last couple of months is this like deeper renewed partnership with Waymo, the autonomous vehicle guys from Alphabet, from Google. And I can kind of see a pathway here where Uber just becomes quite a significant part of this whole ecosystem, because you've got all these little companies, well, little, but companies like BYD in China, and you've got Waymo and like NVIDIA Drive. They're putting like autonomous capability into Mercedes and Toyotas and a bunch of other cars. But in some ways, like none of these companies have distribution beyond like the owner of the company. So, if you're a Toyota owner, maybe you've got like the Toyota app on your phone. Like I've certainly got the Tesla app on my phone. I can control my car and do stuff with it. But if you're just like a rider and you want to go from A to B and you don't own a vehicle, well, you've almost certainly got Uber on your phone today. If you're in North America, you might have Uber and Lyft. And if you're in Southeast Asia, you might have like Grab and a few others. But there's no arguing that Uber is like the dominant brand globally, certainly outside Asia. So they have got distribution, like they're on the apps of hundreds of millions, if not billions of people's smartphones all around the world. And so that's quite a significant advantage in a couple of ways as we now start to hopefully really step towards autonomous vehicles at scale, because Uber have got this mass of data on actual rides. I imagine, hundreds of millions of rides that are being taken every year. And they know kind of what time of day and who wants to go from where to where, and they know kind of which are the routes that are most interesting. And so they've got the data advantage that probably nobody else has at that scale. Like Tesla have got cameras and they've got data on their cars, but they're still, there are far more Ubers than there are Teslas, I would warrant. And then they also have this distribution, which is going to be valuable to a company like Waymo, which is why they've got that partnership. And I think we said in a previous episode, like you've challenged the idea that Tesla would like run their autonomous vehicles on Uber's platform, like they are building their own ride-hail platform. And maybe Tesla's perhaps the exception because they do like to vertically integrate. But I'd imagine like all the other autonomous vehicle manufacturers, it isn't a problem that they want to wrangle with. Like they want to build the cars and get them on the road and make sure they're safe and they comply with the AV regulations. Do they want to get messy and have to have like their own niche? End users don't want like 10 different apps, one for Toyotas and one for Mercedes and one for Teslas. If they just want to get from like their location to a destination. So it seems to me like Uber could have a significant advantage here that might be durable as we go into this autonomous vehicle revolution in the next couple of years.
That it's interesting hearing your pitch here. I don't know if this is my own bias because I'm a Tesla shareholder. It could be, it could be as simple as that. But on the surface, this looks like everything you said feels credible, legit. But when you have somebody like Musk, who, now has more NVIDIA chips than anybody on the planet, as an investor, I just don't know how well I'd sleep at night knowing that he might be like that disruption to the network. It's, I want to say not a non-zero chance, but something more than that. Like, it's almost like, tell me if this works as an analogy. When Netflix was still shipping their DVDs in an envelope, right? The investment case was always going to be streaming. Yet Blockbuster at that moment still was worth however many billions, and people kind of thought like they couldn't wrap their minds around like streaming. What is like no, like no, Blockbuster will be fine, like whatever. But as an investor, I'm like, well, I don't know how it's going to turn out, but if I know there's this guy over here already doing something, how safe is my money going to be in a year or two? That's kind of the feeling I get with Uber, knowing there's a Tesla.
But Uber aren't the only game in town, and they're not even the best game in town, right? It's Waymo are doing actual autonomous driving in a whole bunch of US cities. Tesla aren't doing that yet. Like what has Musk said most recently? Like the next 3 months, he said they'll have autonomous vehicles running. Like it's just like it's another one in his succession of false promises on the dates of this stuff. Like, it will happen eventually. Do you see a future? Is it even a good future where Tesla are like so dominant they're essentially the only game in town with autonomous vehicles? Is it not better that we have like NVIDIA supported platforms and Waymo supported platforms as well?
I think in theory you're right, but understanding what I do about the Magnificent Seven and how capitalism incentivizes the rich get richer,
Mm-hmm.
It's not out of the question for me that Tesla, I mean, it's why I put Tesla as a potential 10x stock from its already $1 trillion valuation, because I do see a world in which maybe their lead is just so dominant that they just gobble up at some point. There's that threshold, and then they cross it, and then they just start buying out. Let's say their product works, right, and it's great, but then this competitor challenges them. Okay, they buy it, or they play mean ball, or some version of like, it's some confluence of factors for me, like Musk's maniacal nature plus its brilliant, all the engineers and all the data. Like, it is reasonable for me to think that Tesla eats it all. So I'm not saying
I don't think so. I'm going to challenge that because, and I think we've seen evidence of this with your company ASTS, because one of Musk's other companies is Starlink. Unless I'm mistaken, sorry, not Starlink, SpaceX. SpaceX are like they're one of their customers is ASTS because they're helping ASTS deploy their satellites into orbit, and ASTS's satellites will compete with Starlink, which is part of SpaceX. So you could say, like, if you took that sort of view you're just espousing there, like Musk is going to be, this horrible capitalist and try and just win by all costs. Well, he's not doing that in space. And that's a smart move because like the regulators aren't looking at that, like antitrust, anti-competitive behaviors. They're not looking at that area of space yet, but they will at some point, like next 5 or 10 years. So it's good. Like you want competition because then you don't have the regulators coming and saying you're a monopoly and then, you have to do bad things and break up your company. So I think it's in Musk's interest that there are multiple other successful autonomous vehicle operators. And in fact, he's supporting that as well, right? Because part of the mission of Tesla is to support the transition to sustainable blah, blah, blah. And he's been, giving away access to the patents, and he's giving away a lot of the technology to competitors to move the industry forwards. And, he might try and paint that as this hugely ethical thing, but actually it's probably more just like good business sense, because you don't want to be the only game in town, because then you're just going to take a ton of heat.
I agree with many of those points. I think the ASTS for Starlink thing is more complicated, and unfortunately, when I do the deep dive on it, I think you'll see ASTS has the superior technology, and Musk actually, there's not much he could do. So he's not playing from a hand of strength, but that's a whole nother topic. But the way like Tesla, like you said, opened up all its patents and stuff, I think you're right. It's just that in the context of Uber as your stock, it's almost one of these, I don't know if it's a chicken and egg kind of question, like a network. It's almost like a network and the flywheel effect can keep going for a long time until one moment out of seemingly nowhere, there's some disruption, right? MySpace or whatever, Friendster, and then all of a sudden Facebook, and then where did that come from? If Uber, I'm not sure this is what you're saying, but if Uber really is just, quote unquote, just a connector app or like a networky thing that's not actually doing the quote unquote hard part of building engineering cars, it's potentially easier to disrupt out of nowhere than
Yeah. No,
a space company.
yeah, totally, absolutely agree. But then you could say the same thing about Airbnb, right? They've, essentially, that's kind of what I'm saying. Like Uber would become like the Airbnb, like the marketplace that matches riders and robot cars, autonomous vehicles, and then a ride happens. Yeah, you could say, what's the advantage Airbnb has? But, the advantage they do have is like the brand and the fact that they're, like it's a verb, to Airbnb something, right? They're so embedded in the public consciousness, and they've got distribution, like they've got knowledge and partnerships and stuff in like so many cities in the world, just like Uber do. So, like, of course, anything can be disrupted. And I'm certainly not buying Uber stock myself right now, and I've got my own ethical problems with Uber. I think like the way Uber Eats operates is not great. It's certainly not great for restaurants. But I think it's an interesting idea. I think it's a good Safari stock idea because it's a good one to have on the watch list and to keep an eye on as things develop.
We should definitely keep track of this for like maybe a future predictions episode. One retort though on on that last analogy, Airbnb is like dealing with, call it, assets that are fixed, a house, hotel, right? So that really is just like a networking platform. Your house isn't going to grow legs overnight. But what I'm saying about Musk and whatever he's up to is that the moment you start thinking of it as an AI company that's like moving at a rate of innovation that is unseen before in the history of humankind, I just don't know what in God's good name they may or may not be building and how disruptive it might be to the whole friggin' ecosystem. And so Airbnb, sort of safe, sure, safe network. Tesla, big, giant, maniacal Ahab behind the wheel. So maybe not. I don't know. I'm just, what? Really, all I'm saying is I subconsciously always have the how well could I sleep at night owning this stock. And despite buying your pitch, obviously the answer for Uber for me is not well.
All right, good. I don't need you to agree with me for it to still be a good idea.
Yeah, let's mark the price today and just see how it fares. Let's track this one because it is so interesting.
Yeah, okay, sure. Yeah. What is the price today? Give me the market cap. That's probably more useful. Yeah.
So it is right now selling for $65.79 per share, which is a holy cow, $139 billion market cap. I didn't realize it was so huge. So yeah, if you're right, it's going to get way bigger. If I'm right, that's a huge loss.
I haven't done any financial analysis on the company, but okay, let's go a bit deeper with this one in a future episode.
Cool.
You know what we did say? Why don't we use it as our example? So we did say a couple of weeks ago we would do an episode at some point soon where we would show like how to do financial analysis, because I think I'd said like last week, one of my buddies had just sort of bought a company blindly without knowing anything about it. And then in 2 minutes, I kind of ripped it apart. And it's a hugely complicated topic, but there probably are some basic things you should look for in any investment, even if it's like, there might be nothing that's like such a big red flag. It's a no. Everything is in the context of the company and how big it is. But there are certain things I would always look at. So maybe we can use Uber as our example of that, and we could do that in a couple of weeks' time.
Oh yeah, that's great. Cool. Great idea.
All right.
Yeah.
All right. Do you want to bring us home? Anything else we want to talk about this week, Christoph?
Sure. Well, we're already at an hour, huh? I'll try to make this short. We're going to post a link to a YouTube video I watched with the CEO of Microsoft, who was, I think for his own ends, pitching the idea that AI agents and what AI can accomplish is going to be very disruptive. My main takeaway from watching that video is merely to say, while I once was a huge fan of companies that are SaaS, have the SaaS models, subscription as a service, meaning software. I'm sorry, sir. I do this all the time. Service as a subscription.
What? No, it's software as a service.
Oh my God. Yeah, that, right? Uh, that I want to go on a record again that because these companies are still loftily valued because their business model is so superb with really high margins, that anytime the CEO of Microsoft is on the record as saying, watch out, there's this new force around the corner, or maybe it's already here, that has the capacity to disrupt that stuff. I, as a non-expert, or maybe a well-educated, call it, investor, but certainly not an expert from the inside, I say to myself, I don't know. I can't know how true some of these claims are or are not, but all of a sudden they're possible. So we talked about this in a previous episode where I brought this question to you. How worried does this make you in terms of CrowdStrike? You said not very, because cybersecurity is its own thing. And I'm going to retain my right to stay skeptical and not put sassy stocks in my portfolio because I don't know anymore.
Yeah, like it was definitely like a hot investing theme of, I suppose like the last 10 years or so, something like that. And it made sense. Like software as a service was all about, like, you don't go out and, as a company, do like multi-billion-dollar deals to buy licenses for a piece of software. Literally, it's like the bottom up. Some guy in your office just starts using something and they use their credit card and they buy, access to use it for, just for themselves. And then it grows organically. So like the SaaS business model was really smart because like the barriers to entry for the customer, that's the wrong term, but like, yeah, like the sort of, like the term that was thrown around was land and expand. Essentially, like the software organically gets a place in a company as a user because it's so easy to just turn on and it's like in the cloud. You don't have to install it. And then the company starts getting a true economic value from it and just expands its usage, like land and expand. And that model really worked. Like it meant that SaaS companies didn't have to spend a whole ton of cash on sales and marketing because they just had to have a great product and it was so easy for customers to engage with. And so what Satya Nadella, the CEO of Microsoft, was saying, and a number of other big names in this space are concerned about, is with like the coming onslaught of AI, do you need to even go and buy these services from these SaaS companies? You just have like an AI and you just tell it what you want and it essentially builds you, like it creates the software that you need for your very specific use case, and it's really tailored to your company and like your vertical you're operating in. And that makes sense. Like this whole space is going to get disrupted quite heavily. I don't own too many SaaS companies myself now. Probably it's the cybersecurity ones. So for me, my portfolio today, that's like CrowdStrike, Zscaler, and Palo Alto Networks. I do think those guys are going to be more resilient because there is like a real-time element to like a customer has been breached over here in Hong Kong, and then almost instantaneously via the cloud, the remedy to that breach can be rolled out to all customers. I think it would be hard for AI, my understanding of how AI is architected today, to do that, but it's not impossible. But I think I'm happy to continue to be invested in this particular vertical within SaaS for now. But yeah, maybe Satya's shined a line on it, and we should keep a closer eye.
Right, and you gave me another idea for a future stock discussion, which is Snowflake. I want to return to that for exactly these reasons. But
okay. All right.
That's all. I think that's all. That's all we have. Big topic wise, but as always, I love giving a shout out. We love giving a shout out to all the new Patreons over at patreon.com/Wall Street Wildlife. We have Shay Pon Tsung joining us, a good buddy of mine, Daniel Joshua Rubin, Big D joining us, and Philip S joining us. We've got quite the boisterous cast of characters: sloths and capybaras and dolphins and monkeys and tigers frolicking in the jungle together. So check us out. That's where we post all our backstage shenanigans and just making a really lovely community over there. So ladies and gents and furry critters who joined us, thank you. Really appreciate your patronage.
Beautiful stuff. Great stuff. It is nice to see the community growing, and and we are starting to have really good quality conversations over there. So fantastic. Let's keep the momentum. All right, Christoph, are you ready to become a beast of an investor?
Your journey starts right here.
A reminder that the people on this program may hold positions in the companies that are mentioned. Buying and selling stock carries financial risk, which could include loss of capital. The views in this program should not be taken as personalized advice. Before acting on any of the information provided, listeners are encouraged to consult a financial or tax professional.